Hello again, good morning. Welcome to the Business News here on Sunrise. Coming up this morning, Government of Ghana targets third straight oversubscription with a 5.274 billion cedi treasury bill auction today. And Bank of Ghana's policy to convert rural banks into community banks designed to pull country's vast informal sector into the official banking system and significantly deepen financial inclusion.
The Bank of Ghana is just repositioning the community banks to reflect modern banking practices and, of course, deepen financial inclusion.
Plus, Ghana targets sustainable construction as Trade Minister urges cement makers to drop imported clinker and shift to local raw materials in cement production. We have details of these headlines and many more coming up shortly. Do stay with us. And this is the Business News on Sunrise on 3FM 92.7. And now, Government of Ghana is making a bold return to the domestic debt market this Friday, June 19, 2026, with an ambitious target to borrow 5.274 billion cedis. The massive issuance, organized under the tenure 2012, will see the state issue treasury bills across the standard short-term tenures, the 91-day, 182-day, and 364-day bills.
Market observers are watching today's auction closely as government aggressively chases its third consecutive oversubscription streak. In recent weeks, the domestic market has demonstrated robust liquidity and strong investor appetite, consistently yielding more bids than the state's initial target. This Friday's auction, with a target of 5.274 billion cedis, will serve as a critical litmus test for local market confidence. Government relies heavily on this short-term instrument to manage its immediate fiscal obligations and roll over maturing debts. This continuous borrowing cycle keeps domestic interest rates under intense scrutiny as investors weigh the state's rising debt demand against market liquidity. While the high targets reflect the state's intensive financing needs for the 2026 fiscal year, Three Business notes that the recent momentum of oversubscriptions suggests a favorable outlook. However, all eyes remain on how pricing and interest rates will react to such a massive volume request when the tender officially closes today.
That was a 3 News Desk report on Government of Ghana targeting third straight oversubscription with a 5.274 billion cedi treasury bill auction today. And now, in a move to modernize the microfinance sector, the Bank of Ghana has begun converting rural banks into community banks. A policy finance and tax analyst, Nelson Kujo-Kwagbeji, says this will pull the country's massive informal sector into the official banking system and drastically deepen financial inclusion.
The Bank of Ghana's rollout of its community bank transition is designed to capture the nation's vast informal economy and accelerate financial inclusion.
Which is actually aimed at strengthening financial inclusion and bringing on board the informal sector, which still remains outside the official banking system. The Bank of Ghana is just repositioning the community banks to reflect modern banking practices and, of course, deepen financial inclusion, considering the fact that these community banks are actually closer to the people and they actually finance the SMEs within the economy.
Under the Central Bank's revised Microfinance Sector Framework 2026, these newly designated community banks face a steep climb in their regulatory capital, with the minimum capital requirement raised to 5 million cedis, up from the previous 1 million cedis.
I believe this is aimed at improving the liquidity of the community banks and also helps in strengthening their balance sheet. Well, on the whole, I think that we need to commend the governor of the Bank of Ghana, Dr. Isiama, for his innovative ideas within the banking sector. I think his policies are yielding the desired result by way of resilient financial sector that can support the various economic actors within the country.
Under the directive, All existing rural banks are required to complete statutory name changes, corporate rebranding and other regulatory adjustments by December 2026. The conversion comes as the rural banking sector marks 50 years since its establishment in 1976 to promote financial access in underserved communities.
Meanwhile, the Bank of Ghana has announced a significant 26.6% expansion in total banking sector assets, climbing to 493.9 billion cedis. Speaking on the industry's performance, Governor Dr. Johnson Isiama highlighted a strengthened capital adequacy ratio, which rose to 22.3%, while Dr. Isiama noted that these developments reflect the resilience of the banking sector and the collective efforts of regulatory institutions. He warned stakeholders against becoming complacent.
Total banking sector assets expanded by 26.6% to 493.9 billion Ghana cedis. Your capital adequacy also strengthened, with industry ratio increasing to 22.3% from 17.5% a year ago. Asset quality, that has also improved, with the NPL ratio declining from 23.6% down to 18%. These developments demonstrate the resilience of the banking sector, and it reflects the collective efforts undertaken by all institutions, including ourselves, represented right here. Nonetheless, we must not become complacent. Elevated credit risks remain a concern, and banks must continue to strengthen credit underwriting standards. They have to improve recovery processes, and they must comply fully with regulatory requirements that are aimed at reducing non-performing loans to tolerable prudential targets.
That was Bank of Ghana Governor Dr. Johnson Isiama. Minister for Trade, Agribusiness and Industry, Elizabeth Ofosu-Jare, has called on cement manufacturers in Ghana to prioritize local raw materials over expensive imports to ensure long-term, cost-effective infrastructure growth. The following three business users report has more.
Delivering the keynote address at the high-profile Intersem Africa 2026 conference in Accra, the minister pointed out that Ghana's expanding industrialization agenda will naturally trigger a higher demand for cement. However, she emphasized that this growth must not come at the expense of the economy or the environment. The push for local substitutes comes amid deep structural limitations within Ghana's traditional manufacturing framework. According to Frederick Albrecht, the chairman of the Chamber of Cement Manufacturers Ghana and CEO of CBI Ghana, the country possesses limited suitable limestone deposits, making traditional domestic clinker production completely unfeasible. Albrecht explained that relying on imported clinker exposes local builders to heavy financial shocks due to global supply disruptions, port congestion, and volatile fuel prices. He noted that clinker production requires extreme temperatures up to 1,500 degrees Celsius, which spikes production costs. To bypass these hurdles, stakeholders at the summit are championing the transition to limestone calcined clay cement and other eco-friendly alternatives.
And that was a three business news report on Ghana's trade minister demanding shift to local raw materials in cement production. And now let's take a look at how the cedi is faring against other major trading currencies and how some of the key commodities are also faring on the global market.
On the interbank foreign exchange market, the dollar is selling at 11 cedis 17 pence worth. It lost 2 pence worth. The British pound is selling at 14 cedis 77 pence worth. It lost 23 pence worth. The euro is selling at 12 cedis 81 pence worth. It also lost 17 pence worth. However, be guided that these figures could be higher at the Forex Bureau name. On the global commodities market, Brent crude is trading at $79.55 per barrel. Gold is trading at $4,203.62 per ounce, down by $53.31. Cocoa is trading at $4,237 per ton. It recorded no price change.
Well, that's how we end the business news. For more news updates, just log on to our website, s3news.com. In a world where you can be anything, just be kind. It costs nothing to be kind. My colleague Moina Egbata continues with the morning show. Good morning.